Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, welcome to today's top stock picks. I'm Jeremy Mullen and I will be doing Shoe Carnival today, ticker symbol SCVL. Stock is Zacks ranked #1 strong buy that is one of the nation's largest family footwear retailers. I've recently been looking out for stocks that have held up well during this market carnage, and Shoe Carnival is definitely one of them. Since the market sell-off started back in February, Shoe Carnival has managed to trade sideways. That is very impressive in a market like this. I think investors might want to be long into their earnings report this week. Before we go out and buy the stock, let's talk more about the company and about last quarter's earnings. And after that, we will look at the upcoming earnings and then look at the chart. Okay, here we are at the profile page. Some little factoids about the company. Shoe Carnival was originally founded in 1978. It's headquartered in Evansville, Indiana. It has over 370 stores and 2,600 employees. The company currently has a market cap of just under 900 million, as you can see right here. The Zacks style scores, we have an A in value, C in growth, but F in momentum. Okay, the forward PE is under 8. We have a 7.5, which helps to that value score. Okay, this is going to be looked at a value stock. And the company also pays almost a 1.2% dividend there. Okay, so let's look at the recent earnings. As you can see, they have a nice streak going here. They haven't missed since that COVID quarter back in 2020, and the stock really does, the company does beat a lot. We only see 3 misses going back here to 2017. So looking closer at last quarter, we highlight here, we see an 80% surprise to the upside. So 80% beat on that bottom line. And within that quarter, revenues were up 23% year over year, and same-store sales were up 17.7%. They also raised their quarterly dividend 28%, so rewarding investors here after this last quarter. Shoe Carnival guided fiscal year 2022 at a range of 380 to 440 versus the 391 expected, and sees revenue up 47% year over year. Okay, let's look at the estimates, which usually gives us some clues into next quarter. As you can see, we don't have a lot of analysts covering here. Not a lot going on in the current quarter and the next quarter, so we really don't have a lot of hints into this print. However, for the current year, we see some revisions going up lately from 391 to 410, and for next year as well. So we're going in the right direction when a lot of companies are seeing estimates going down. I'll take that as a positive. Okay, now there was a recent note out from Seaport Research. This was out last week. They see Shoe Carnival's Q1 same-store sales guidance and see upside to the 2022 margin outlook. They cite Google Trends search volume. Now, this is a very positive signal, as it has been a 90% correlation with same-store sales over the last 3 years. The firm also cites Buckle's recent earnings results, which were positive, and they add that data from their footwear surveys has been better than average. So while Seaport isn't a top-tier firm, they do have a $55 price target on the stock, which is 75% higher from current levels. So while we don't have a lot of analyst coverage, Seaport is one firm that is very bullish on the stock, and with the stock trading well, they think that their higher prices are to come. So let's look at the charts. Okay, we have a chart up here from about 2019. You can see the COVID sell-off came almost down to that $5 level before it started trending higher. And you can see this nice trend line that it formed throughout that COVID rally. We even started channeling up here, and you can see every time it hit the top of this channel, it would come in pretty aggressively. So the stock was in a nice upward bullish channel, and then at the beginning of the year, it did come in, break that channel, and come back down to this April 2021 low area, which has found a lot of support. So the market has continued to go lower. Right now, the S&P is down almost 20% on the year, and Shoe Carnival has done pretty well. They had some recent earnings that supported the stock. It did come in. However, it's traded sideways around this $30 level. So what that generally tells you is the market knows something that we don't. And with earnings coming up and the price action staying pretty positive here relative to the market, I really feel like were in store for a possible quarter. So let's zoom in and see what might happen. As you can see, back in November, there was a highs made there. Stock consolidated, but further breakdown into the beginning of the year. We had that nice quarter, spiked higher, came in close to lows, but this 28 area continues to be very nice support. So looking at the moving averages, the red is the 200-day, blue is 50, and the green is the 21-day. They are all moving sideways. So there isn't a lot of directional bias here looking at these moving averages. Looking at a Fibonacci retracement from these highs here to the lows of 2020, the earnings gave us a pop right into that 61.8% above the 200-day, but it was a failed breakout, and they took the stock right back in close to the new lows. So when we get earnings, one of two things is going to happen. It'll be a disappointment, just like a lot of the earnings out there have been, and we'll probably test these new lows. However, this price action is telling me the opposite probably will happen, and we can get another gap higher, perhaps back to this 200-day. But perhaps investors might like this one to take this level out. And if the quarter can be good enough to be a catalyst to move price higher above this 36.23 area, my longer term target would be up here near Seaport's $55 target at 50. Now, it might take a while to get up here, right? In this current market atmosphere, it's not going to be easy to get up here. However, we could see a gap up with maybe squeeze the shorts above this level, come back into the 200-day. This is when the risk takers, or the people who didn't want to be risk takers and buying now, would want to buy when they see this support holding, and then they wait for the longer term move up here. So I think we'll wait. We can wait and see how earnings go this week, or you can front run the headline and look for that gap. But either way, the technical setup is pretty good relative to the market, and I think it's worth the risk. Okay, that's it for me and my top stock pick, Shoe Carnival. Here is Dave Bartosiak with his.
Well, thanks for that idea, Jeremy. I've got another one for you. It is Zacks ranked number 2 by Helmrich and Payne, ticker HP. Let's take a look at Zacks.com and see why I like it. As I mentioned before, Zacks ranked number 2 by here. It is in the oil and gas drilling industry, which right now is actually in the bottom 31% of our Zacks industry rank. So this does not go without risk. The value style score is a D. B for growth, B for momentum, helping round out with a VGM composite score of B. Let's take a look at the detailed estimates to see what's going on here. So we've got a big beat in the prior quarter. Also have a big earnings ESP heading into this quarter. So a couple of large numbers there. Let's take a look at the detailed estimates. Here you could see revenue growth really solid this year, 57.62%, ramping up to $1.92 billion. Next year, you're still supposed to get 28.69% revenue growth, boosting that sales number to $2.47 billion. Translated over to the EPS side, not really making money this year. Going to take an L, 52 cents here. That's still 80% better than last year. Next year, though, that's when things really kick in. Company's hoping to make $209 for next year on some really solid growth. Following up on that big beat, you really had analysts up the ante. 7 analysts kicking it up for next year, 3 for the current year. That's brought our current year consensus from a 95-cent loss all the way up to a 52-cent loss, and sent next year's number from 54 cents all the way up to 209. So those are some big moves there. Here, my favorite chart on Zacks.com, the price consensus and EPS surprise chart. You can explain so much about a stock by taking a look at this. So the black line here corresponds with the right y-axis, which is the price. These little green arrows are earnings beats. The red arrows, earnings misses. So you see there is a miss that pops in every once in a while here. After all, we're off talking about oil. These multicolored lines represent the evolution of our Zacks consensus estimates over time. So something I want to point out. Throughout 2019, things were going down on the EPS side, which dragged the stock price down. Well, what's happened since then? We have a trough here in 2020, and now nothing but growth year over year. And what's happened recently is an acceleration to the upside in estimates, which has helped push the stock price along the way. But if you really zoomed in on this, you would see the stock kind of peaking while estimates are still pushing up. That, my friends, is a sort of divergence between earnings and the stock's price that I want to see when I'm coming in and looking for a stock to buy. So there you have it. That's my top stock pick of the week. Don't forget to check out Zacks.com/promo for this week's deal on our Finding Number One Stocks book, Stock Picking Made Easy. For Jeremy and I and everybody else here at Zacks.com, thank you so much for watching, and we'll see you next week.